Weak US stocks and really strong Asian stocks and something in between in Europe. The market is not in sync all over the world. We will have a closer look, so stick with me and see what we can expect. Let's start with the US market and there with the mother of all indices, the Dow Jones. In this case, this is the future, the June contract. You can see here YM. This is the symbol for the E-mini Dow future. And you can still see that we are in the big picture around these green levels here, which are marking some kind of a support here, which is hopefully able to turn around the market, maybe in this area, maybe a little bit below. As long as the market is not plunging through this level, it's really strong. Everything seems to be okay. But on a shorter time frame, it does not look very nice. This is not indicating that there is a need for many thousand points of drop, but at least now it does not look like a perfect entry situation here for the US stocks in this week, maybe. So if you have a closer look on the daily chart, there's nothing to mention, to be honest. It's more like to have a closer look at the intraday chart. And even if you are trying to trade just one time a week, just sometimes within the week you're watching the market, I would recommend to have a closer look on the lower time frames as well, because they are giving me an indication whether the market wants to turn at the very moment or not. And you can see clearly in the 50-minute chart, for example, that we have something like a movement to the upside, but you can see this is really a weak one, really not satisfying on the buying side. It is roughly the same what we've seen here, but in a lower time frame. You could see that we have a strong movement to the downside and really shaky to the upside. And here's also a strong movement to the downside on a lower scale and a shaky movement to the upside. So what I think is that the market is still not in the mood to buy here, that the market participants are not willing to jump into the market and buying positions here. I think that we have the better chance from what I see from the market participants here, that they are not willing to buy, that they still see some bad influence and expecting that the market will continue to drop. You can easily see this in a 4-hourly chart. This is a little bit more complex, but for you valid viewers knowing about the Elliott wave, this might be something interesting because we have a really strong movement to the downside in this part. And then we had something like an ABC pattern. An ABC is something normally corrective. And this is a little bit disturbing for some people because this one is lower than the end of the first strong movement we have seen here. This is something we call it a corrective pattern, like a sidewave corrective or correction. And it looks normally like an A, B, C pattern, something like this. It can be a little bit higher than this one. It can be a little bit lower than this one. In this case, this seems to be lower, but it is a good chance that this is marking some kind of a corrective pattern here. It looks quite well for that. If this is the case, this is not a promise, but if this is the case, we can expect that the market is continuing something like this here again. So we can expect that the market is doing here another movement in roughly similar size from what we've seen here before, which would lead us to 32,000 roughly. And this would pinch this level here from end of February, which is a little bit above the 32,000 level. So I would expect from what I've seen now that we have a good chance that the market is continuing to lower ends, is going through this level here as well, reaching 32,000, maybe a little bit below that levels. This would not necessarily kill the bullish idea because we would be still in the range of the green area here, which is marking some kind of a corrective pattern or a perfect size for a corrective pattern in regards of what we've seen here. So as long as this is the only part we can expect, everything seems to be okay for me, even for the bullish side in the bigger picture. But for now, I don't see the best opportunity to buy. What would turn my opinion? Of course, it would be turned when the market, in this case here, is showing something strong to the upside, maybe a little bit similar to what we've seen here. I take away all these drawings, similar to this one. and something corrective, which was not the case here. Something similar like this and something like an ABC pattern here, and a break through this intermediate high. So what I need to turn around and go to the bull side and searching for buying opportunities would need a strong movement to the upside, an ABC pattern, for example, or something looking a little bit like this to expect a continuation. And if this is the case, depending on the size, of course, you may take profits here. Maybe you close half of your position here if you're a shorter term trader, or you stick with the position saying, okay, I trail my stop here to my entry or a little below these lows here, stick with the position in case the market is turning around for a longer and bigger picture here. But whatever I'm telling you, currently this is not the case. So currently buying does not look like a good opportunity here for this market in my eyes. And it's not inspiring me here to hold positions or to increase my positions here in these markets. Vice versa, to search for selling short the market. In this case, it might be a good opportunity. I give you a bit of scale maybe here. Maybe an opportunity to wait for a drop through these levels here. So the last high is here. The previous high was here. This is a really aggressive one. So some sellers would sell short here at that level. The other one would be at that point here. And at least from that here, expect roughly the same here maybe, which is also leading us to a lower scale. And maybe somewhere here we will get some corrective pattern here as well, same like we've seen here, and then the last part here as well, to fulfill what we've seen here in that part, and here another one to that lower area we were talking about before. So I see the better chances here on lower price levels, to be honest. I think we have a good opportunity to expect this. And this is not killing the bullish over big picture here, let's say like this. But this is giving me an indication that buying now is not the best opportunity. Switching to the S&P 500, it's roughly the same. The intermediate movements we've seen here, this is clearly corrective. And in no way a chance to enter a bull position here, in my eyes. So in this case here, it's also the same here on a lower time frame. It's roughly the same idea we've seen in the Dow Jones. And also here I expect lower prices. And we also have this trading situation which is really typical. A strong movement to the upside, which normally is followed by an ABC pattern, which roughly drawn may lead us to the typical target area for correction. This is not a must-have. Some people are thinking the market needs to go there because this is typical. No, that's absolutely not the case. The market does not need to go there. It's not a must that this has happened, but it's really typical. So we can expect it and we should think about this. And all we see here on the lower time frames, like this one or very low on this one, for example, you can see all these patterns we've seen here are not indicating that buying is the best opportunity. So I would target currently 3,800 in the next maybe weeks, not necessarily here at that time. It can take some months, but that the market is continuing on lower prices here. Before then, the decision is to be made whether the market is turning and we can buy again, or the market is plunging through these levels as well. But we will see this here. So good, we have enough chances to do other follow-up videos here to talk about that situation at that time. Nasdaq is roughly the same idea. You can also see here we had a strong movement to the upside. Now we can maybe expect something like an ABC pattern. The target area here is roughly below the 12,000, which is normally marked as a typical target area. Of course, it is. Many people following me know that the typical box, no, that's the wrong button, that the typical box for a setback is roughly here, 38.2, 50%, 61.8 of this level here as a retracement. However, through the internal shape of the first part here, we can expect that this is a good thing with this cluster where we have I bring this up, where we have several levels from same size, from extension size. You can see here are many of them. So I would expect that the market needs to reach these levels here. Not necessarily exactly these level here, but it would be really typical. And it is roughly around 11,600 plus minus 100 or 200. I don't know exactly, but it's not really important now. From the current points, a little bit below the 13,000, we may expect that the market needs to continue lower first before continuing to the upside. And this is also indicated by the situation here. You can also see here on this time frame, is as long as these are the shaky points, you may expect that the market needs to continue lower prices here first before continuing to higher prices. So I would not buy this market. It is a selling opportunity, not necessarily for all times intraday. Maybe you will find something there as well. If you want to have more information also intraday, you may follow me not only on this channel. Maybe you have a closer look at BORN-4-Trading. There you sometimes get updates within the day. And so if you want to have information on this one, you can send me a message or just send a comment, and we can get into contact, because this is set up for the German audience already, and we have some English-speaking clients as well. And if you want to follow me as well, just let me know. So these are the US stocks indices. The most important one, of course, you can have a closer look at the Russell 2000 as well, but the big picture is roughly the same. We are at the quite interesting level here as well, around 2000, a little bit 100 above, 100 below, but we have broken this level a little bit already, and all the indications also from the lower time frames are giving us a situation for, let's sell short the market. So also the broad market here, marked by 2000 stocks here in the Russell 2000, also the US stock market on the broad side is indicating lower price levels first before entering the bull side, in my eyes, at least from seeing what I've seen here. So before coming to the European markets, let's switch to the Asian market. We have a really special situation in Japan. We have the Golden Week, so my best regards to all the Japanese people, and I hope you can enjoy these times. So you may expect that this week the market is quite volatile, or at least thin, because some days we are not trading. So we have a lot of breaks in trading here. So it's maybe not the best choice to trade the Nikkei. However, the last movement we've seen here is indicating that we have some strength here. You can see this here in a 15-minute chart, strongly to the upside. Any shaky movement to the downside is indicating a buying opportunity on these low time frames. And maybe we will have this on a bigger picture here as well. You can see roughly this idea here as well, and you have maybe a trading opportunity when the market is breaking through the level of April 21st. You can see roughly a little bit above the 27,500 when the market is breaking this level. This might be a buying opportunity. However, maybe wait a little bit after the Golden Week when the market participants are coming back and we have higher trading volumes, and the reliability of the trading signals are higher in after these holidays, not in between when the market is open sometimes. So what is about the Hang Seng, the Hong Kong index? The Hang Seng is a little bit similar, but there's no Golden Week for the Chinese or the Hong Kong people. So you may expect roughly the same idea. You can see that this market is really strong to the upside, and as soon as the market is giving me an ABC pattern here to the downside, or anything else looking strongly corrective like, I would trade long this market, because this is giving me a good picture of a strong movement is leading to the upside. A weak movement is not pushing us down anywhere, so we can enter the market. This is also in sync with the bigger picture. However, it's not super clear. I think some people may search for a trading opportunity at that point. To be honest, I would prefer to see something like this, to enter at something like these points here, or if it's only an ABC pattern, it might be roughly the same, of course. This is giving me a better picture, because this is not so clearly giving me an ABC pattern, especially because this, what we've seen here before, it might be something like a sideways correction in this case is D3. D3 is marking something like a double sideways, which is also a corrective pattern and should lead us to higher prices. So I think we have kind of a good trading situation here. I would wait for some setbacks here to enter the market at that point. If you don't want to wait, you may wait for the highs, the intermediate highs here, mid of April, roughly 21,500, 600 roughly. And when the market is breaking these levels, to expect some continuation of the first part here. So expecting coming straight to 25,000, maybe a little bit short, but somewhere around these levels is at least possible in my eyes. It is roughly the same with the Shanghai Composite, but you don't have the same picture on a 4-hourly chart. You just have the picture on a 15-minute chart. So for all guys and girls, of course, who want to trade these on lower time frames, this may be the first good chance that this is the first part to the upside. It can by no way be something like a C wave of a flat. Otherwise, the market would need something like this before. And as this is not occurring here, we can definitely understand, okay, this does not seem to be a C wave of a flat. So in case we have something like a corrective pattern, we nearly have a 100%. Theoretically, we have a 100% chance that this will follow in the aftermath. So when breaking some levels in between, like I've mentioned before, then you would have a good trading opportunity to enter the market here on the bull side. I think this may be really interesting in the near future. So switching over to the European markets, let's start with the German DAX. The German DAX has also a good trading opportunity, I think, in the making at least. You can see the 15-minute chart here in the DAX index. You could see that the last movement to the upside looks quite impressive on a 5-wave pattern. We have some issue here. Something we can talk about, is this overlapping, yes or no? This low, the 4th wave here, is lower than the interims highs here from the corrective, but not lower than the 1st wave here. So there is a chance that we can see this as a non-overlapping situation, or even if overlapping, it can be something like an leading diagonals and some movements at the end or the beginning of a trend. And as the market came down from higher levels, it is the chance that it's a leading diagonal. So there is a good chance that after this, we can expect that the market is doing minimum something like this again, which may lead us to roughly 14,500, 400, something around this area. The setback we've seen here, this is also, it's really typical. I bring it up a little bit. So you can see this is also looking like a sideways correction here. And this is a typical target area. You remember 38.2, 50, 61.8. If this is an ABC pattern, which is looking a little bit like this one, we have a chance to see this as a complete corrective pattern. So as soon as the market is giving me something like this, a break through this level, which is in my eyes too late. I would not wait for this for breaking these levels here, because I don't like entry points that are near or at the highest point of a chart. And this, in this bull market, this is the highest point. So I don't like this one. I don't want to trade for this one. However, when the market is giving me here something like an ABC opportunity, then I have a chance to enter the market here on the bull side and see what will happen. If you wonder and say, yeah, but the DAX is typically connected, closely connected to the US market, and if the US market is falling, the DAX never has a chance to do in a different direction, so to have gaining prices here. Well, that's not absolutely the fact. Of course, very typically they are roughly in sync. I've made some videos on this already. Maybe in the near future I will have another video where I describe how this is happening. But it can be that the market is coming down in the US, but this market has some strength. And we should not forget that currently the situation in Europe is very much driven by the Ukrainian war, and not so much by the Fed, the US Fed, while the US market is not really influenced by this war situation here in Europe. It is more driven by ideas of the supply chain in China, and also and very much by the Fed decisions on the interest rate hikes. So we have a little bit a different market situation, which may lead to a different outcome. And you should not forget that buying is only when the market is doing this and triggering this. If the market is not triggering because falling from that point, then we would never buy, because we will not trigger our long position. That's the reason why I always recommend to use a trigger, not entering the market. I know many private traders are saying, I don't want to wait, I just enter the market, I just buy now. But that's not so smart in my eyes. I think it has a higher value if you wait for a break to as a confirmation, and not entering at any point and saying, yeah, I don't want to wait, I don't want to waste some points. Sometimes this is punished by a market which is never willing to buy but just falling, and only when breaking here, then you have the confirmation. Okay, now we can do that. So I think we have a good opportunity here out in the next time. It's not given that the market will do this, but we have this opportunity. Otherwise, if the market is continuing, I would not be bothered so much at the very moment, because we should not forget the market has a typical area to go here inside. So even when falling lower, it would be a chance that later the market can recover here from that point. So I would say currently it's not the best choice to sell short this market. If you want to sell short, I would prefer to go to the US market. And here I'm more prepared to buy, but only when triggered, of course. If this is happening, and if the market is then in the wake of this continuation is breaking also through the levels here of 21st of April, the same level, by the way, we've seen in the Nikkei 225, then this might be a buying opportunity to expect a continuation of the first part here again. So this may lead us to higher prices, and even maybe leading us to new all-time highs, not too far in the future. So last but not least, let's have a look at the Swiss market index, which has also some kind of good time here. Really strong one, a really shaky one here to the downside. And I see here the chance that the market, in case giving us such a pattern, that we can enter the long side here. Currently, the market is, however, going even lower, which is not a big surprise, because it is really typical that the market is coming into this area and a little bit more right than this level here. So as soon as the market is breaking, to be honest, the market was breaking. Was he? Wasn't he? I'm not 100% sure. I did not follow this one. If not broken, it's perfect. If broken, yes, sometimes you will have a minus trade, but you only have a small risk, because the risk-reward ratio for this trading idea is that if the market is doing this again, you would have such a great profit, and if losing, you will lose such a small amount of money, because you don't need lower lows here. So even if you are long in this situation, yes, you will have a minus trade, a loss. However, if you do this 10 times and having, let's say, 50% profit, 50% losses, it's still a decent profit you can have with this trading idea. So currently it's not looking like the best starting situation here. However, you can see strong movements, shaky movements, strong movements, shaky movements. Maybe you get this here again. If you have this one, you can try to continue these markets on lower time frames as well, just waiting for a break here and trying to enter the market. And if the market is falling down first, then you have the next bigger. So if the market is going here first, then you can see this level here, roughly 12,200 as a break. Not now. Some people are asking me, why not entering the market here now? Because this is the highest price in the bull market. The last low was this one. So in this bull market here, in this part, of course it's a really short time frame, but this is working on all time frames as well. This is the highest level, and I would never recommend to buy at the highest level. If you want to buy on lower levels. Same here, don't buy at this level, buy at this level, for example. It's not, maybe it seems not to be a big difference, but trading is something like a statistically experiment with a risk reward, with a probability, and your chances are way higher not entering the market at that point. Wait for an intermediate high, not that point, enter at that point, for example. Your chances and the risk reward ratio are much more into your favor if you do like this. So this is not an entry point now, only when the market is going here first. So if you see the market is plunging here, breaking these lows, then this is the latest low. And in case the market is breaking this intermediate level, then it's a good trading opportunity on the bigger picture. I know it's a little bit confusing at the very beginning. However, I wish that this is helping you a little bit to see how we as a professional trader are dealing the markets, how we see the situations here. It is by no means intended to give you an impression that we are always doing profits. No, that's not the case. Half of our trades, roughly half, it depends on the trading approach, but half of our trades are in the minus, are negative, are losses. However, the risk reward ratios are good enough to keep us in the green zone, to have some profits. So I hope that this is helping you to build up your own trading idea from this, or to add some extra value to your own trading ideas. So crossing my fingers for you, hoping you have a good week. See you soon. Bye bye.